Alrighty, folks. This morning on the Daily Financial News, you heard me talk about Jeremy Grantham, the bear, Tom Lee, the bull. But folks, Mr. Dan Bird has been on this bull thesis almost all year. He has taken the time to put together his bull thesis. He started buying Friday afternoon. What the heck is he doing? I have no idea. Dan, welcome to the show.
Thanks. It's great to be here. Look forward to Vegas.
Oh, it should be a lot of fun. You have an exciting hour in front of the audience. I know they will be asking you a ton of questions, but I got to talk to you. You started buying Friday afternoon.
I did. Yes.
And you have a bull thesis. So I'm just going to sit back and go, how can you have a bull thesis with all this craziness going on in the world?
By the way, both of those guys you mentioned, both of them will be right at some point.
Yeah, exactly. Exactly. Yeah, timing, just timing.
That's right. Exactly. It's all about timing. Yes, I've had a bull thesis all year.
You have?
You know, I've talked about, actually, let me show this. Let me show my website first. If anybody's interested in getting my newsletter, just go to breakpointtrading.net and register. You don't even have to register if you just want the newsletter. It's actually free, and you can just click on the little box in the upper right of the website, which is right here. Just click on this box and the PDF will be there. You can just download it. You don't need a password or anything anymore. I put this little box up here. This is a suggestion from a subscriber, by the way. So do you have any place where I can see what the earnings are coming up?
Oh.
So I put this little box here that takes you to investing.com, and it shows you, earnings coming up, and you can change, here's earnings tomorrow. You can just click on any of these and change the time frame. If you want to see everything for the whole week. If you want to go back to last week, wasn't anything yesterday, but so that's just something I added just to make it a little easier to find earnings.
Nice.
So yeah, let's talk about, first thing I want to remind everyone of is this.
Yep.
So this is really interesting. And part of this thesis came from Stock Traders Almanac, because they did a webinar this week, and I learned a lot from that webinar. I talked about in the last one their MACD buy signal, which I've now added to the front page of the website so anybody can track it on their own as well. Are you still there?
Yeah, I'm here.
Okay. You were moving, so I wasn't sure if you were.
I was enthralled by the chart.
Oh, okay. So this is the long-term secular chart. Secular bulls, secular bears. I originally thought that I got this idea from Tom Bowley, and then I enhanced what he talked about. Turns out that it's Stock Traders Almanac. They came up with this. So secular bull markets typically last 18 to 20 years. This one lasted from 81 to 2001. Secular bears typically last about 12 years. This one, you could say, started in 2009, or when it actually broke out of the high in 2013. But regardless, we are currently in a secular bull market, and we will continue to be in one until any one of these three turns red. And none of them have yet. Even with the big bear market in 2022, we came all the way down to this 200-week moving average line, but we never closed below it. Even in COVID, we came down to it, but we never closed below it. Now remember, these are monthly bars here.
Right.
All right. So we are still in a secular bull market. Next thing, I want to show you where this came from that I just learned over the weekend. This looks very similar, doesn't it? This is the chart from Stock Traders Almanac. And what they said, super boom is underway. Now, notice the date on this. 2019, before COVID. They said the super boom is on the way. It's basically the same thesis that I just laid out, secular bulls and bears. Okay? With a similar looking chart, same time frames. They actually came up with this idea in let's see, the original write-up from our old newsletter, pages 10 through 12, June 2010. 2010. They forecasted a 500% plus move, and they forecasted the Dow to be at 38, right here, 38,820 by 2025. Okay. Does that sound outlandish?
When they made that call, probably.
When they made that call, it was at 26,000.
Right.
Yeah, everybody thought they were crazy. So right now it is on track to hit that, based on the fact we're in a secular bull market that could last till 2029 or 2030. Now, here's some work that I did. I sent the guys a couple of notes when they were doing their webinar. One was on the yield curve going back above zero, because they were saying too, yeah, when the yield inverts, then recession is going to follow. And I sent them a note and I said, no, recessions follow after the yield gets back above zero,
right,
4 to 6 months later. And he didn't understand what I was saying, so I had to send him my chart in an email separately. And once he looked at my chart, he goes, oh my God, you're right. This is a great piece of research that we should be doing.
Yeah.
So I went back and I did something called consolidation theory. Consolidation theory says, it's right down here, the consolidation will usually continue in the direction of the previous trend and for an equal distance. Okay. So this consolidation is a little bit messy. I'm going to show you the S&P and the NASDAQ ones that are a little bit more well-behaved. But because his Dow theory in that article said 38.8, and I wasn't even thinking of that when I did this. I said, let me see what consolidation theory would say based on where we've come from, the October low, way back here, right? We had a great run up, and then we consolidated across here. And this dotted line is the center line of this consolidation. So you calculate the distance, 28.7 was the low here, 33,750 was the middle.
Okay.
That equals 5,050 points.
Yep.
Or about 17.5% gain since October.
Right.
You then take that 5,050 and you add it to the midpoint, and look what you get.
Oh, wow.
38.8. Is that amazing or what?
Yes, that's pretty freaky.
This is technical analysis. Let's call it 201.
Yeah, 201. Yeah, okay.
Because consolidation theory is not something that a lot of people think about.
Right.
Right. So let's look at the S&P. This consolidation is a little tighter. And do the same calculation.
Okay.
And what you get is a target of 4420. I'm sorry.
53.50.
53.50. Yeah, I'm sorry. Yeah, the midpoint is 4420. Okay. Target of 53.50. All right.
Wow, that seems aggressive.
Yeah, that's well above the 4,800 all-time high that I have been saying from the beginning of the year that we're going to hit.
Yeah, it's like 15% higher than the.
Yeah, but interestingly, the distance that we've already traveled to the midpoint of this consolidation is 26.5%.
Yeah, that's pretty wild to look at. Yeah.
So, can we go another 30% from there? Sure, we could. And again, 30% from the midpoint, not from the high. 30% from the midpoint. Now, this doesn't say when that's going to happen. Basically, if you take October to October, that's about a year. So from a symmetrical symmetry standpoint, probably sometime next year that we'll hit that.
Okay.
Now, interestingly, the year before an election is usually bullish.
Right.
the year of an election, especially when a sitting president is running for re-election, is always very bullish.
Yeah.
What could change that is if it's an open field. If something happens with Biden and then it opens up the Democratic field,
okay,
then we may get a downtrend in the beginning of the year, but it will still go back up by the end of the year.
I have no idea the last time. When was the last time a sitting president didn't run for re-election that was able to run? I don't remember that happening.
Let's
Might be a while.
Yeah, I'd have to think about that. Gerald Ford ran. I don't know. Good question.
Okay. Folks, if you know, or you can use Google, let's find out.
Yeah. Here's the NASDAQ. NASDAQ midpoint right here is 15,200 using consolidation theory. Target is 19,700. 30% more from this midpoint. All right. So 42% is what we've already done.
Wow.
So yeah, we could easily do 30% more.
That's wild. 19,000. Come on.
19,000 could be 20.
The one thing that I'm missing on this is there's no timeline. You're not saying 19,000 by the end of the year, are you?
No. That's what I said in the previous one. I said that this doesn't say when it's going to happen.
Right. Yeah.
But if you take symmetry of the chart, it's basically this is the beginning of this is January. So January of 25.
Okay.
And by the way, Stock Traders Almanac, when they predicted all of this back in 2010, they said 38.8 by 2025.
Right. Yeah, I remember.
So all of those dates, timeframes kind of line up with this as well.
Interesting.
Very interesting.
Quite a call by them right now. Look, that looks pretty good, especially for a call that made that long ago.
No kidding. Looks amazing. So let's look at something else. This is the famous
I love this chart.
Relative rotation graph. In this particular case, let me make this a little bigger. In this particular case, I'm not going to animate this yet. I want to talk about it first. But what I did was I put together all of the growth indexes and the value indexes. Okay.
Yep.
Because I wanted to see how they were rotating. Okay. If the market was ready to go down, if we were going to follow, was it Jeremy Grantham was the bear?
Correct. Jeremy Grantham, bear. Yep.
If we were going to follow his thesis, then him and the rest of Wall Street should be getting out of growth stocks and getting into value.
Yeah, you would think. Yep.
Right. I mean, I would have loved to hear the interviewer asking that question. Does that mean you're moving from growth to value? If that's what you believe?
Right. Yeah.
Because that's what happens when the market starts to crash. They move from growth into value. But what's actually happening? Well, first of all, you can see up here, I added the NASDAQ and the S&P on here. You can think of NASDAQ as kind of a growth index as well.
Yep, for sure.
This is a large cap growth. Here's the Russell 1000 growth, large cap S&P, small cap growth, mid cap growth. So the blues and the greens are all the growth indexes. Okay. If we go up here and look at that, the blues and the greens, where are they all headed?
Yeah. Upper right.
They're all headed up into leading, and all the value indexes are all heading down.
Wow.
That means traders are rotating out of value and into growth. And just that's the point I wanted to make, but I'll animate this just for fun. This is a 3-month time frame.
Right. Oh, this is fun to watch.
Yeah.
Yeah. Pretty clear.
That's today. All right.
Yep.
That's the next part of my thesis.
Okay. I like that. That one feels good to me.
Okay. Let's this one's going to be a little this is technical analysis 301.
Oh no. Okay, I'm going to try not to feel dumb.
This is again, this is my website. I spent a lot of time on the charts page. In fact, when I'm in the market during the week, I usually have just this page up that I'm working on because I want to look at all of these things and see what they're doing. But this is something I just added called the McClellan oscillator.
Okay.
For New York, I'll explain this a little bit in a second. You can actually, in here, you can actually click on this link and it will take you over here and explain what the McClellan oscillator does and how to use it, what it's all about. But essentially, I'm going to look at the NASDAQ one. Essentially, it takes the advancers versus decliners, and it turns that into a data. They turns that advancing stocks. This is for the NASDAQ. So NASDAQ advancers versus NASDAQ decliners. Turns that into a metric that can be graphed. And then it tracks it. It tracks the trend of whether there's more advancers or decliners. So if it's below the solid line, which is the 0 line in the middle, that means there are more decliners than advancers. But it also shows you the trend of how they're moving. So I put the NASDAQ, the NDX, NASDAQ 100 right below it. So this is the chart down here. And then I highlighted where these crossed that 0 line, just to make it easy to see which ones were below, which ones were above. Okay, you follow that?
Yep.
Now I put these dash lines in here, and that's part of that explanation from that link that I showed you. It says that if they're in between 30 is kind of a sideways trending. It's not really trending one way or the other, or it might be a little bit more bullish, but not a lot more. And if you look down here, it's kind of gone sideways right there.
Right.
Right here below that 30 line, it actually has moved up. So it was actually a bullish period. Just for reference, I put those in.
Okay.
The important thing that I want to point out here, number one, is when this does cross over into bearish territory, the market goes down. Then it started back up again. And when it crossed back above 0, then the market started to take off.
Okay.
So you can kind of use this. I wouldn't recommend using this only. You have to look at other things as well.
Right.
But it kind of gives you a sense of the trend. But the most important thing about this whole chart is the bullish divergence. Something I always look for in most charts is divergences. Okay. Now remember, this McClellan oscillator gives you a sense of advancers versus decliners, right? So if it's trending up, even though it's below 0, if there are more advancers here because it didn't go down and take out this low,
right? So
even though it's still negative, there are more advancers here than there were back here. Follow that?
Yep.
However, look what the price did. Price went down.
Right.
At the same time, there was more advancers. That is a bullish divergence. That's one more clue that we are on the verge of maybe on the verge of the end of year rally. Now, none of this is assured. Nothing in the market is assured. Anything can happen. News changes everything. We just had a war declared in Israel.
Right.
Right. So that could change all of this. We might have a very different conversation next weekend. When we
the charts can be thrown out of the window when war is declared. Absolutely.
That's exactly right. So I'm just showing you all the indications that are lining up with CPI next week.
Yeah.
To start that end of year rally that I've been talking about since the beginning of the year.
All right.
Last thing real quick. First, I just want to point this out to folks. If you like to follow the Magnificent Seven, I want to look at a couple of those because one of the subscribers asked me to do something last week and I forgot to do it. But this ETF, you can see how it's weighted. This is the Magnificent Seven up here: Apple, Microsoft, Amazon, NVIDIA, Google, Tesla, Meta.
Yep.
50%, almost 50%. It's like 48% of this ETF is weighted toward the Magnificent Seven. So if you just wanted something to buy instead of trying to pick which one of these is going to do better.
Yeah.
XLGs. This is not a recommendation.
No, just a fact.
Just an idea, something I came across. XLG is an ETF that you can do that. But let's look real quick at each of these and see what they, and this kind of tells the story of Friday as well. So there's Google. Now I want you to pay attention to this very last bar over here.
These are dailies, right? That's daily.
These are daily charts. Yes.
Okay.
So this is the very last bar is Friday after the jobs report. And that's why I think the end of year rally may have started. And that's why I started buying some things.
Okay.
All right. There's Google right at resistance, almost ready to break out. Now, the question that a subscriber asked, and I'll point this out in each of these charts. He said, how do you use covered calls? When do you know how to use those? Now, covered calls is covered means you own the stock. Call means you think it's going up, right? Covered call, when you sell a covered call, you keep the premium if it does not take out your strike price. So if you sold a covered call on Google at 140 and it didn't make it to 140 and started coming back down, you would keep all of the premium and you would keep your stock.
Right.
If it goes above 140, you get to keep the premium, but your stock will get called away. You'll have to sell your stock, but you're selling it at 140.
Right.
So you make whatever that difference is, 140 plus the premium. Let's say it was $2. So you actually end up selling it at 142. So his comment was, when do you know when to do that? When to sell a covered call? Well, the way that I do it using technical analysis is I use the PPO like this, or you can use the MACD as well. And I will sell the covered call when the MACD is at the top, getting ready to roll over. You're right there. Because that means you can buy it above this price. It's going to roll over. You're going to keep the stock and the premium.
Okay.
Right. And then wait for it to come back up and start to roll over again and sell another one. So that's how I use technical analysis to sell covered calls. Okay. I wait till the momentum indicator is rolling over. I sell the call right there because I'm selling at the top. And this is assuming you want to hold the stock, right?
Right.
So with Google, you'd sell it there, you'd make the premium, you hold on to the stock, goes up here, you sell it again, make some premium, etc. Keep doing that. Okay. All right, let's take a look at a couple of other ones. I won't do all of them. So Amazon. Amazon right there. Amazon doesn't look as good as Google. It's trying to get back up to its 21 day, but it did have a nice day on Friday. Right. And the momentum indicators are turning up. They're just beginning to turn up too, which is a perfect time to get in. So that might be a good one, end of year rally. Apple, it's kind of the same as Amazon. Went down almost to the 200-day moving average. It got above the 21. It's trying to get above the 50 now. But again, had a nice day on Friday. And all of the momentum indicators are starting to turn back up again. So that's good. It's a general trend you'll see. Meta. Meta is really interesting because I'm going to show you something else on Meta. Meta has been going sideways. Even as the market was going down, Meta was not going down. Meta was moving sideways. And it had a nice day on Friday as well. I have one in here called a squeeze. This shows you when a stock moves sideways and the Bollinger Bands right here in the shaded area get pinched or squeezed. You see how they get squeezed right there?
Yeah.
So whenever that happens, that means that's very low volatility. You can actually see down here the squeeze. This shows you a trend line of the squeeze, and it's actually lower than it has been since way back here in March. So it's extremely squeezed. Whenever that happens, think of it as like a coiled spring getting ready to burst, right? And Meta is just, that squeeze is just fired. It's just getting ready to, it's fired out of the top of that Bollinger Band. And that's usually the time when that uptrend begins. Meta is a really good example of that because of how long it's gone sideways. Meta, Microsoft, again, bouncing off of support line. It's above the 50-day moving average. Really nice day Friday. All of the momentum indicators are just turning over, moving up. NVIDIA, same thing. NVIDIA now is above all of its moving averages. and the momentum indicators are starting to move up. And Tesla also started moving up, yeah, actually earlier, but it's above all of its moving averages. The momentum indicators are starting to move up. So it's starting to look good. So all of the Magnificent Seven are actually looking pretty good. Here's Netflix. Netflix hasn't performed as well. It doesn't look as impressive, but it is bouncing off this very important, solid support line right here, which is also the 200-day moving average, by the way. So this, and look at the momentum indicator. Think of this as like a MACD. It's the same as a MACD. It just uses percentages instead of absolute values. So it's starting to turn back up as well. And then finally, AMD, again, above its 50-day moving average, bounced off the 200-day. This is one that I bought on Friday. So it's starting to move up. So all of those things combined is my thesis for an end-of-year rally. Pending what actually happens, just out of curiosity, let's look at the dollar. US dollar actually went down on Friday, but we'll see what happens. Dollar might get a bounce, and gold probably will get a bounce based on the war in Israel. Usually when a war like that happens, it initially sends the market down, sends the dollar higher and gold higher, but it's usually temporary. It won't stay there. And the VIX also, VIX has been elevated, actually touched 20, almost touched 20 up here, but it's starting to roll over now too. So all of those things combined is my thesis for an end of year rally, maybe starting this last Friday with the jobs report, but confirmed with the CPI report next week. Except always remember that news changes everything.
Right.
So that's what I got.
Very, very cool. Well, it's going to be fun to watch. I think next week is the week you've been looking for. CPI is the day. Again, we could have news that changes everything. If something escalates overseas, you know, the news will take over, but it will be exciting week. CPI is going to be important this week. Dan, where can people find you?
Right there, breakpointtrading.net. You can get my free newsletter there. If you want all those other cool charts that I just showed, then it's $99 a year.
A year.
A year.
Cheap. Yeah, no kidding.
Pretty cheap. Yeah.
Very cool. Well, Dan, I appreciate you. We'll talk next week.
All right. Have a good weekend.
Thanks. All right. Bye.